Hey, welcome to Real Job Optional Freedom. Real estate can be complicated. Let an investor guide you. We are here to demystify the complex nature of real estate by getting you answers from professionals who are in the trenches so you can be the hero of your real freedom story. Welcome to Real Money, a weekly segment of the Real Freedom podcast where we ask the most pressing real estate questions. Your host, Chris Bell, and our co host, Kevin Gilbert, today.
Hey, everybody.
So, today we're going to talk about just a little bit different way of buying real estate for the average person. We had one of our team members that was in the real estate market, pre approved, trying to find a nice house to live in, and they're running into the same issues that probably everybody else in the country is running into, and that is super low supply of housing on the market. And if you find a house that you like, you're probably 50 people deep in line to put in, your contract on the house and the crazy stuff that's happening. We've all heard the stories, but over asking price, guaranteed amounts above and beyond the appraised values,
I
no
just had one of
inspections.
those.
It's kind of like the Wild Wild West if you're literally trying to find a house. So conversation that came up was, hey, we do a lot of real estate investing. Why don't we find like a fix and flip property and buy that property instead? And it kind of got the conversation going. Well, it's like, well, I'm approved for this dollar amount from a traditional lender, so the bank has got to, it's got to meet certain appraisal standards, and most fix and flip properties won't meet those appraisal standards. So just again, it got that conversation rolling, and Kevin has just recently done a property that would fit this criteria, that basically bought it low, fixed it up, is refinancing it out, and it's
I've
not the
actually I've
traditional
actually
way.
been involved with both versions. Just renovated a house and sold it. Was hoping to get 220. The agent said, "Let's push the envelope at 240," and it ended up going from a person moving from California, and they said 269 uh, will guarantee, even if it doesn't appraise, we'll still take it as is, no inspections, no nothing. So I just experienced it on as somebody selling a house. So I understand you're getting closed out by people with more cash and more loan opportunities. And then on the other side, you were talking about doing one of these as a distressed property and renovating it and keeping it. So yeah, I just did both sides.
Yeah, I think the traditional term for it, from the real estate investing side, is the BRRR strategy, where it's the uh, buy, renovate, rent it, re- uh, refinance it, repeat. So somebody, I think Bigger Pockets came up with that catchy phrase for it. But at the end of the day, you can do these kind of deals without any of your own money out of your own pocket if you do the numbers right, and then potentially could use your traditional bank lending to refinance out at the end. Uh, could have some home equity built up, and have a property that's completely renovated the way that you would want it renovated, because you're the one, in charge of doing it. Kevin, can you walk us through a little bit about the recent one that you did?
Yeah, so basically, I bought a, one of the things about home ownership for your primary house or even new investors in general, um, nobody has the vision yet, right? Like you watch HGTV, you can kind of see it's possible, but you walk into a house that looks bad, smells bad, and has some scary things going on. It scares people off, right? Um, So I bought a house that would not qualify for a mortgage. It would not pass anybody's inspection, right? There was actually a tree tearing up the back of the roof over the kitchen. So it needed everything from some roof work to kitchens, bathrooms, all this stuff from carpet, paint. Um, it needed a lot. So you buy this house, you buy it at a discount. You tell the person you're buying it from you're using cash, even though it was hard money. It was an investor loan, quick. House doesn't need to appraise. It's expensive, but it's quick and it's a 6 month loan. So I grabbed it with one of those, had a contractor renovate it, and it just appraised for $200,000. So I haven't got the loan yet. So we just finished the appraisal, still putting the documents in, and a lot of the lenders require 6 months seasoning, but the one I'm using right now requires 3 months. So I still got like 4 weeks. The only thing I don't have yet that they need is a lease. So I need to put somebody in there and get that done now that the appraisal's out of the way. But I'm going to have a loan for 138 on a house that just appraised at $200,000, and this is a way to do that and get these houses without any cash out of your own pocket in a crazy market like this.
That's pretty cool. So let's break that down a little bit, because I think people hear that story and I don't know anybody that would say, "Man, I don't want to buy a $130,000 house that's worth 200, that's had work done to it." People would say, like, I want that deal. Where did you get the deal? How did you come across the property? Is there a pipeline of these? Are they easy to find? How are you going about finding the deal?
You know, it's funny. I've been doing this for a while, so you get kind of a network, but you don't need one. Like, drive down the street and call the "We Buy Houses" signs. Call the investors. Go on Craigslist and Facebook Marketplace. Um, you're looking for wholesalers. You're looking for people who are marketing and finding these houses. If you're not going to market and find them yourself, and you're calling them up and say, "Hey, I'm looking for a cash deal. Here's what I'm looking for. Do you have anything available?" And right now, it's hot. Things are going fast, so you might have to call a few people before you get anybody who said, "Oh, I had one and it just sold." So you get a lot of that, but that's just a market of the change of the timing in the market. That's all. Like, the houses are still available. You just got to do a little more homework, have a little more patience, and I find the deal of a lifetime once a month. In a normal market, I'd probably find it once a week. So
Wow. So there's definitely a way if you're a newbie to go out and find these quote unquote deals, um, probably through networking and calling the signs, calling all those "We Buy Ugly Houses" signs, and um, making a connection with the people that are doing that marketing. If you don't want to do the marketing yourself, and just say, "Hey, I'm a buyer for distressed properties," and you talk to enough of those people. I think anybody, any town in America can drive around and find 30 of those signs with different phone numbers, and they're probably 30 different people. You know.
yep, yep, yeah. I mean, there's in a normal market you could call for sale by owner signs. They don't exist right now. It doesn't matter what the market is. This stuff works, and the houses are out there. And the reason is anytime you get a house where you can't sell to a normal homeowner because the mortgage it won't qualify for a mortgage, be it a tree fell through the kitchen, or the HVAC doesn't work and it needs a new water heater. Whatever the reason is, if it doesn't qualify for a mortgage, somebody has a problem, right? So you can show up with cash. Sometimes there's a timing issue and they need to sell it tomorrow and they can't wait for that entire process. You never know until what it is people. Houses are big purchases, and for somebody like me, somebody like you, they're a blessing. But for many people, it's a huge, huge burden because if you're struggling day to day and you got these bills coming in, the grass needs to be cut. It's. I mean, imagine you're living paycheck to paycheck, and suddenly you inherit a house, and now you got two mortgages, two lawns to cut, two utility bills. It can be a huge burden on somebody's life. So every day people are living life, and every day a house can be a huge asset or a huge liability to somebody.
Okay, so now we've gone through the process. You've got a contact with a wholesaler. Wholesaler contacts you and says, "Hey, I've got this house for sale. Do you want to buy it?" What how do you know that, this is a potential deal? Are you looking at just how cheap it is? Are you looking at after repair value? Are you looking at, what's it going to cost me to renovate this? What are you looking at to make those decisions that it's good enough to keep moving forward?
Well, in this interest rate environment, the loan payment on a monthly basis is not one of the things you should look at. Normally, it's very, very important, but right now the rates are so low that you can almost assume that if you can get the mortgage, that the payment's going to be just fine, right? Rents are going up, and this particular loan is going to be like 4.25, 4.5%, and I'm going to rent it for $1,600. My payment with taxes and insurance, I'm expecting to be maybe $800, right? So not important in this interest rate environment. That's kind of the magic of it, right? What's really important is you got to understand that between all your costs, hard money is not expensive. It can cost you 10% of what you're borrowing. Um, the repairs got to fit in there, and the loan I'm doing is a 75% loan, right? So it has to praise for high enough so that you know I'm in under that number. So that this house is appraised for 200,000. My loan at the end of the day is going to be 138,000. So I'm under that 75% mark. So you got to pay attention to all these numbers and realize that even that in mortgage is going to have some costs. There's a couple points in there and some fees. So
So there's, you know, and people look at hard money and they look at it sometimes differently. They say, hey, 10 points on hard money and 15% interest, like that's super high or that's really expensive. But I think when you can get uh, a property cheap enough or you can get a deal, the hard money is just a tool to help you facilitate the end game. And I think that's where you can look at it and go, well, it helped me get to where I wanted to be. So albeit be it that that money may have looked expensive, it's helping me get my end game. It really, it's just a tool to get you to where you want to go.
right. So you know you got to remember the hard money buys me the time without coming out of cash. If you got 100, 200 grand lying around that you don't mind tying up for a few months, yay, go for it, right? But you know, the person we're talking to, they're not in that kind of position, right? If they're going to do something of this scale, it's going to be borrowed money. So that just needs to be factored in, right? So if you're seeing comparable sales go as this example 200,000, and you really believe that this house, if renovated, is going to be worth 200,000, you just need to get it at a price that also factors in that 10% cost, right? So if you borrow 120 grand and you're okay paying 12 grand for the hard money and all your loan costs, then you factor that in. If it doesn't math, then your offer is not 120, your offer is 110. You adjust, right? And there's a point where you get a number and you say, hey, if I get the house below this number, all my math works out, right? And if you're sitting on 10 grand, you can be okay, like I can pay a little more and still hit those numbers, right? I'll be under 75%. But if you don't have that cash, you just got to find the deal that's even cheaper. People believe that it's impossible or it's a rare, unicorn, um, but you can find them every day.
So, one of the things that I'm reminded of, over my career investing in real estate is you make money when you buy the deal. And if you didn't make money when you bought the deal, it's next to impossible to make it up somewhere else. So,
Time's your only option.
right.
And if you messed up too bad, then you're just bleeding.
Yeah,
So.
absolutely. So when you're going and you're evaluating these deals, Kevin, are you plugging the numbers into a spreadsheet? Are you looking at a after repair value percentage? Like, how are you quickly going? Hey, I need to dig in here and look at it more.
So, I mean, this stuff helps if you have a spreadsheet. It's real clear if you're not having an easy time visualizing these numbers. But if you've been doing it for decades, and I started my real estate career with a college degree in business finance with a focus on real estate. So, you know, I really understand amortization charts and these price schedules, and my brain almost thinks in percentages, right? Like I think more about the percentages than I do the dollars, which is helpful when you're seeing inflation and other prices escalate, right? Things used to rent for $1,000. If you think about it as percentages of the house rather than it's $1,000, when rents go to up to $1,200, your brain adjusts better. But I guess the answer is just experience. I'm a big fan of spreadsheets, but I can kind of visualize these percentages in my head just due to experience. But you're definitely, before you pull the trigger, probably going to want to sit down with a piece of paper, if not a spreadsheet or some other documentation. It's one thing for me to be scribbling numbers and playing with the financial calculator on my phone. It's another thing to sign on the line and commit to a big investment like that if you're not used to it.
Yeah, absolutely. I think just looking at the overall picture of this, there's things that come into play that, kind of that old saying, you don't know what you don't know. If you had planned on turning this property over and refinancing it in 30 days, and then you find out that the seasoning for a traditional loan is 6 months, you've got 5 more months of holding cost. And if you
Yep.
didn't know that, whoa.
Well, so I've been investing for years, and I'm a big fan of private lenders and individuals in my community who are interested in rate of return, but too busy being a doctor or a lawyer to, be hands on. So that's my main financing arm. So the first step I did on this particular deal was I spent time talking to the mortgage broker, clarifying all these questions, right? But you got to know to ask them in the first place. You got to know that a normal refinance, they don't want to do it 2 days after you bought the house, right? They'll be happy
Yeah.
to, but they're going to do it based on what you paid.
Right. Right. Um, so you found a lender that would basically do a 3 month seasoning, which is half of the traditional time. How'd you go about finding somebody that would do that?
Well, that was a matter of research, and to be honest, I found a broker who had a portfolio, if you will, of maybe 20 um, lenders that he worked with, and this mortgage broker focused on investors, so he's very familiar with the lingo and all that. And each of his lenders had like a different focus, right? So if you have this, but you don't have that, or you have that, but you don't have this, he'd kind of gear you towards what he felt was the best option. And knowing that I was doing hard money and buying the deal, quickly renovated it, and trying to get it performing right away, he pointed me towards one who only required 3 months before they would do a loan based on the appraisal value and not what I purchased. Because
So let's talk about these loans a little bit. So hard money loan, um, they don't care about your credit. They don't care about anything except the deal. They're looking at
yep.
the deal, and that's basically your thumbs up or thumbs down based on the deal for hard money.
Right. So hard money is great. I say great. It's expensive. You're paying for it. But um, imagine your rich Uncle Bob goes out and looks at this house. And basically, what he's looking at is, would he buy it for this price? So if you go out there and a hard money lender says no, I'm not going to lend you on this house, you need to reevaluate your math. Don't go looking for a new lender. You need to basically ask him why he's not willing to lend on this house and take to heart whatever answer he gives you. If he tells you like, I think your foundation's about to fall in, you need to go look at that foundation. If he's telling you that those comps are a different category and they're on the other side of the train tracks from your house, you need to like drive your neighbor. Whatever he tells you, you got to understand that they're in the business of lending money. If they don't lend money to you, you're missing something important. So
Yeah, they literally don't make money unless they lend you the money. So they want to lend you whatever the dollar figure is for these houses because that's how they make money. So when those guys say no, that's a red flag to basically listen.
Yeah, I love getting into the weeds on this stuff, and sometimes it sounds a little complicated, but this is not rocket science. Like, I was saying spreadsheets, and I'm messing with a financial calculator. It's sixth grade math, but it's big numbers, and that's what really scares people. Is none of it's impossible to learn. None of it requires a rocket science degree. But I think when people are used to working for a certain amount of money per hour, per week, per month, per year, and then you go look at a house, the price tags and the costs can really scare people. And it's not rocket science, but um, it can be scary. So, I mean,
So let's look at the other side of the loan. So we've got one loan that required nothing but the deal has to be good enough. No, you didn't need your personal credit. You didn't need all that stuff. It didn't matter what your day job was. And then we
I have no day
go,
job, right? It's real estate investing.
so then we go to the other side of this and we go, hey, you're going to refinance and basically get a long-term loan on this. So what kind of requirements do those lenders require now?
They require everything. So you got to remember these guys that are creating the loan. They're not the end investor, right? They need to fit it into a box that they can package with other loans and sell to Wall Street company. Some investment firm in Europe, somebody who doesn't care but wants to buy 1,000 of these things, right? So they have a lot of boxes to check, right? Some of them are stupid. They need 2 months of your bank account statements, so that they can tell you're not living paycheck to paycheck, right? This particular one wants $6,000 sitting in your bank account for 2 months, and that the reason is if your payment's $800, they know that if you have 6 grand, you can you'll be fine if it's vacant for a month, right? Um, so that's one of their boxes to check. Another box to check is like the LLC I'm buying in. It needs to be in good standing with the state corporation commission. There's just a lot of boxes. There's a credit check. There's a appraisal. There's a bunch of little things. You need a lease. So in that 3 month window before I can get the official loan, I have to show up with a document that somebody is paying more than my monthly payment. I think they said 90%. So I'm nowhere near 90%, and it's hard to imagine anybody right now will be, but at these rates. But they lend up to 90%. So say if it rents for $1,000 and your payment's $900, that's kind of their cap, right? So they have a bunch of little boxes to check, but none of it's crazy or unreasonable. It's all things that if you speak to the mortgage broker before you jump in with both feet, you'll.
So is it better, the lender maybe that you're using, is it better than walking into a local bank and saying, hey, I want to refinance this property?
So banks are hard to beat. If you can get a loan from a bank, if you're a doctor making $500,000 and you're buying a $100,000 investment property, they're going to line up to kiss your feet, right? Um, but banks are also. Somebody once told me, I think it was a banker who told me this. He said, "Imagine you're going to your best friend's grandmother and asking to borrow money." And that's how conservative the banks are with a dollar, right? So while their rates are fantastic, their money is cheap, they are also prone to tell you no. And if you're new at this and a bank tells you no, you throw your hands up and go like, "Oh, it's impossible. It's not for me. I can't make it work. The bank told me no," right? And the truth is that that is the most conservative, tight, hard to get loan out there, right? There's way more lenient, reasonable investors, but they're also going to charge you a slightly higher percentage on your money. So,
Makes sense. Makes sense. So you're looking at this from an investment standpoint, and to kind of bring this back around to how we originally started this, we said we've got a team member that basically wants to buy a house. It, how would they, somebody who is maybe looking to buy their first property,
I
how
love
would
this
they
idea.
how would they benefit from a model like this? Would they be able to beat out investors? Like how could they win in this scenario?
So that if you're willing to look past the purple walls and the lack of carpet and the fact that there's no water heater and whatever other ugly things are in there, right? Sometimes there's no kitchen. You're like, this is where the kitchen is, but there ain't a cabinet in here, right? If you can see past that easily fixed ugly stuff, you're in a great position because the investors, the rehabbers, the flippers, they're all looking for a profit margin. They all got overhead, right? You're looking for a home and a payment you can afford for the next 30 years. So as as a potential homeowner, as somebody who's you don't need that profit margin, right? So if a rehabber is trying to make 30 grand, you can pay 30 grand more. If somebody's, you know, got a $10,000 cost somewhere, you don't have that cost because it's not a business for you, right? You're not trying to cover overhead and payroll and all this other um, costs that add up when doing this as a business. If you're looking for a place to live, you're in a great advantage because they're gonna be like, oh, you're paying too much, and you're gonna be like, what a deal, right? It's all perspective and what's your end goal, right? So I love the idea, but not a lot of people take advantage of that, and it does require some creativity and if not having somebody hold your hand, then it does require some some bravery, right?
So, where do you come up with the money to renovate the property? So you got hard money to buy the property. You've got the end lender who's going to refinance you out. Where does the money come from to renovate this property?
So, in the case of the example I just did, I paid out of pocket. So I spent $30,000, pretty much right on the head, like maybe 200 bucks over, to renovate the house, right? And then you get some of that back at the end of the loan. But hard money lenders are happy to also lend the rehab costs, right? Especially if you have, an estimate for a contractor already, or two or three contractors, even better. But if you have a contractor lined up that's got a proven history and is ready to go and has already walked the house and is giving you an estimate with plans, and man, the hard money lenders, the small individuals in your community with money lenders will be stoked to also finance those rehabs. You don't have to come out of pocket for that. You can literally borrow that. And often they'll do it on weekly draws. Like the hard money lender's happy to help you buy the house, cover the cost to purchase the house, and then on weekly draws as work is done or materials show up on site, cut those checks to the contractor. So yeah, you don't have to come out of pocket for that one. And um, I actually know a guy here locally who he does the crazy rehabs. Like he'll buy a house for 30,000, spend 80,000 renovating it to sell it for 200,000. Whereas I'm more like, I'd like to pay 80 and only spend 30, right? Like he cuts them down to the bare bones, does everything. And it's kind of magical to see because it's like a brand new house. Whereas I'm like trying to paint and carpet a little bit, right?
Yeah.
Um, and he has lenders who provide that stuff. He's also got a history and can show that him and his team do good work. And I think you're building a relationship there. But if you're just looking to get your first house, and if it's going to be a primary house, I would find that contractor, and that would definitely help with the hard money. The comfort zone, right?
So what I guess it sounds like there's a really big win here for people that are looking for their first home that are maybe having a hard time in the traditional market. What what's the most difficult part of this? What are the pitfalls? What somebody new into this that's never done it? Where's the place where they're going to mess up?
I think part of it is just you need to ask questions, seek out experts. Um, you know, some of the problems with agents is like the agent's looking for a commission. Some of the problems with the guy selling the house, the wholesaler, is he's also looking to sell the house, right? You got to ask yourself, like, where am I getting the advice, and is it free for a reason? One of my very first deals back in the day, um, I had a money issue that I eventually figured out, but I was going to have to back out of this deal. Like, I'm a kid, I'm in my 20s, and I remember the agent going, "But we did our job. We should, you need to come through so that we get paid." And I remember right there, as soon as they said those words, I said, "Oh, oh." It was a big light bulb and a learning moment for me. So I think if you're doing this for the first time, is just don't be afraid to seek out information, ask questions. It's not rocket science. It's not as scary as you think. Uh, but it's also like it's if you want a bottle of water at the store and you're like ready to pay a dollar, and then they're like it's $1.25, you go, oh, okay, well, okay, $1.25. You do not want to do that with a house. If your math says I can't pay more than 110, you don't want to pay 120 unless you got cash sitting around, because if you make that kind of mistake, or you get into a frenzy, and you feel like you're missing out on all the deals, that becomes a problem. So you really need to be both brave enough to take the leap, also brave enough to say no and wait for the next deal. So,
Awesome. Kevin, thanks for sharing your story.
yeah, Chris, I know you got so many stories. We got to really turn this around, and I got to interview you.
Take care, guys.
Absolutely.